Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in China because, unfortunately for China, the slump is continuing. And we've now got the data for August, which shows us that prices are now falling again. China has fallen back into a deflationary cycle. We've seen this with producer prices, which are also still falling, but we've now got falling retail prices and food prices. And in addition to that, we've got a slowdown in terms of the level of exports and also imports. And that represents serious problems for the rest of 2025. And of course, one of the key issues that China is facing at the moment is that its biggest single export market, the USA, is now proving very problematic because the tariff of 30% has been applied against all Chinese exports to the US. And in fact, some products are seeing higher tariffs than that, and there is still uncertainty as to what the long term situation is going to be, whether or not those tariffs might actually be increased. And this represents a serious problem for the Chinese authorities because they're trying to hit a 5% growth target for 2025. And that's now looking very questionable, particularly because the long term malaise in the property sector is still continuing. Now, before we get into the details and all of that, firstly, I'd just like to ask anybody that hasn't subscribed to please hit that subscriber button. I'm looking to get to 500,000, so if you could help me out, I would really appreciate it. And also, I'd like to say thank you to today's sponsor, investing.com. Now, when we're talking about paying for investment analysis and databases, I'm always asked the question as to whether or not it is worth it. I've been using investing.com for the past few months, and I can tell you that it's proving to be hugely successful for me. In fact, if you've been following the channel, you'll know that I've been posting videos talking about the fact that I'm using AI technology to select stocks. Well, that AI technology is coming from investing.com. I'm using their pro picks. And as you've seen from those videos, I've been making really good returns. In fact, so far in September, I've been following the picks that were selected at the beginning of the month, and two of their stocks, Oracle, is up by more than 50% and Astera Labs up by more than 25%. And if you saw the recent video that I posted, you'll know that my overall portfolio is up by more than 6% within a period of 7 days. And the great news is that investing.com is having a flash sale whereby you can get 50% discount on the fee. However, Joe Blogs viewers can also get an additional 15%, meaning that you can get a total discount of 65%, which is the cheapest rate this year. So if you're interested in taking up this offer, scan the QR code on the screen now or click the link in the description below, but don't hang around because the flash sale won't last for long. This table shows the monthly value of Chinese exports to the USA over the past 12 months and compares that figure to the previous 12 months. So you can see that in August 2024, the total value was $39.8 billion, and that compared with $36.8 billion from the previous year, representing an increase of 8.1%. And if we look through the rest of 2024, you can see that between August and December, there were some healthy increases in Chinese exports. There are some seasonal variations in the monthly figures, so sometimes figures go up and sometimes they go down. But overall, in the second half of 2024, there was a strong increase. You can see August, it was 8.1, September, 6.9. There was a slight decrease in October. We saw an increase of 6.3 in November and 9.9 in December. And then in January, which was the month of that Donald Trump took over as the president, obviously he was elected in November. So everybody knew that he was going to take over on the 20th of January. We saw a huge surge in Chinese exports. They rose from the previous year figure of 35.7 billion to 41.6, representing an increase of $5.9 billion or 16.4%. And the reason why there was such a big increase was because a lot of businesses were concerned that Donald Trump was going to apply tariffs on imports from China. That's what he'd done during his previous presidency. So that's what everyone was expecting. And guess what? That's what actually happened. And so a lot of businesses brought forward their orders and imported stuff from China. Now, partly as a result of that, and partly as a result of some of the announcements of the tariffs, because Donald Trump immediately applied a 10% tariff in respect of the fentanyl issue, and then we've seen subsequent tariffs. There was a drop in February of 0.7%. We then saw a further drop in March, 1.8%. And then in April, May, June, and July, you can see the impact that the new tariffs have had on Chinese business with the USA. This is the level of exports. So in April, there was a fall of $6.2 billion, almost 20%. In May, the fall was 14.5 billion, 41.4%. In June, it increased to 15.2 billion, which was almost 45%. And in July, exports were down by 14.4 billion. So that was 35%. So you can see here the huge difference that the presidency of Donald Trump has made to the value of Chinese exports into the USA. And the USA is firstly the biggest market in the world. Secondly, China's biggest export market, so the most important. And thirdly, it's also the most valuable in terms of the price that Chinese businesses are able to achieve for their exports. So they get good margins from the exports that they make to the USA. So the reason I wanted to show you this data is just to show the problems that have now surfaced for Chinese businesses, because they've lost a huge amount of business. If you look at since January, the figures here, if you total these up, we're talking tens of billions of dollars of value that's been lost. And of course, every single month, Chinese companies are continuing to encounter this problem. And it's difficult for them to find alternative markets because they're mass producing so many different products. It's hard to suddenly just pivot and start selling tens of billions of dollars worth of goods to Europe or other countries. So it's a major problem. And this is one of the reasons why the Chinese economy is struggling right now, because China basically has two markets for the products that it's making. Either it sells those products overseas, so it's its export market, or it sells the products in China through the domestic market. And we'll have a look now at the data, but they're having problems in both of those markets, and that's the issue. One of the issues that the businesses are facing is that we're continuing to see problems with inflation in China. This chart shows the movement in the year-on-year inflation data over the last 12 months. And you can see that in the last 7 months, we've got some negative figures. The scale on the right-hand side goes from plus 0.9%, so we're talking quite low levels of inflation here, down to minus 1.2% at the bottom. And the line across the middle is the zero line, so neither an increase nor a decrease in prices. So you can see that from February, we've had 5 months of negative prices and only 2 months of positive. And those positive movements were 0%, so basically nothing, and 0.1%. So over the last 7 months, China is seeing the price of items on the shelves going down. And that's a major issue. We've talked about it before, and I'll talk about it in a moment when we're going through the producer prices. But if prices are constantly falling, it's good news for consumers because you can buy things for less than you were paying this time last year. But it's really bad news for businesses because if you've got any cost increases at all, you can't pass them on. This is basically just wiping out your profit margin. So what this chart is showing us is that the home market, domestic sales, are now less attractive for Chinese businesses because they're having to cut their prices to make the sales. And that's meaning that basically a lot of them are making losses. And if you have a look at what's going on with food inflation, the situation is actually worse. If we go back to that inflation chart, you can see that the latest data for August is a fall of 0.4%. So, and that's the biggest fall that's been seen since February. So things are getting worse in China. If we look at food prices, they're actually down in August by 4.2%. So that is a massive chunk that's come off the price of food. And here you can see the same scenario that since June, the situation's getting worse. So they fell by almost 2% in July and then more than 4% in August. We've now got 7 consecutive months of falling prices. And in fact, if you go back to December 24, we had falling prices then. There's only been one month out of the last 9 months where there's been an increase in food prices. And if you're a food producer in China, this is an absolute nightmare because you're producing all of the food, but you're having to cut your prices constantly, and therefore it's just taking out all of your profit. And if you have a look at what's going on with producer prices, so these are also referred to as factory gate prices, the price of a good once the factory has made it and it's being shipped to the stores or the wholesaler or wherever it might be. And what we can see here is that the scale starts at 0 at the top and goes down to minus 3.8 at the bottom. And in every single one of the last 12 months, producer prices have fallen. And the most recent data for August shows that producer prices fell by 2.9%, which is massive. When you think, and when you compare that to the inflation data of minus 0.4%, producer prices are falling far more rapidly than actual prices. And so basically, all the companies are having to absorb all of these problems. And the issue that you've got here is that if your rent is going up and the cost of energy is going up and the cost of labor is going up and the cost of raw materials is going up, all of which is happening. So businesses in China are paying more for all of those items, but they're still having to cut their prices. So this is an absolute nightmare. It's just basically taken out all the profit for Chinese businesses. And we've talked about it before, but more than 50% of Chinese companies are now banking losses. And if we expand the scale of this chart to show what's been happening over the past 3 years, you can see that China is now close to having a full 3-year cycle of falling prices. They've been falling for 35 months. So this is an absolute nightmare. How do you break out of this cycle? Well, the best option for Chinese companies would be to stop selling things into the home market and export them. If they had strong demand overseas, then that would be great. But as we just talked about, their biggest single export market, the USA, has actually made things worse for them by introducing 30% tariffs. And they're seeing month-on-month falls in the amount that they're exporting. So both markets are proving very difficult for Chinese businesses. And if you have a look at what's going on with exports, this chart shows the year-on-year movement over the last 12 months. And if we look at the latest data for August 25, it shows that year-on-year exports have risen by 4.4%, which you might think, well, that sounds quite positive. But when you look at the trend, since March, there has been a consistent fall in the growth in exports. Back in March, exports year on year rose by more than 12%. So 4.4 is a major fall compared to that. And actually, when you look at the last 12 months, it's one of the worst performing months in terms of the level of growth of exports. And also, the 4.4% is important because China is trying to achieve 5% growth for the total economy. And we've just talked about the fact that the home market is proving very problematic. So therefore, the economy is now relying upon the export markets. But only achieving 4.4% growth is not going to give China overall growth in GDP of 5% for 25. So there's a major question mark as to whether or not it will be able to achieve that. If we have a look at what's happening with imports, you can see that there's an interesting situation here. And imports are important to China because they basically tell us what's going to happen over the next few months. Chinese businesses import lots of raw materials, which they then use in their manufacturing processes. And so if they're ordering lots more raw materials, it tells us that the companies are gearing up and getting ready for a huge boost in exports and production. If they're not, it tells us the opposite. And as you can see, the data from August shows that year on year, exports only rose by 1.3%. And when you look at the last 12 months, China has really been struggling to increase its exports. In fact, in 6 of those months, we saw negative figures. So the level of imports actually fell. We did have an increase in July. It looked like things were starting to pick up. However, that's fallen away in August. So what this chart is telling us is that Chinese businesses are not gearing up. They're not getting ready for a big push for the rest of 2025. In fact, at 1.3%, that's not going to help them achieve that 5% GDP growth target. Now, we've talked about the property market a lot when we've been talking about China. In fact, it's been one of the biggest topics over the last few years. A few years ago, it was contributing more than 25% of GDP. It was on fire. It was basically the heartbeat of the Chinese economy. Everybody wanted to buy Chinese property because it was going up and up and up in value. However, following the introduction of the three red lines and the removal of debt facilities for a lot of the big property developers, we've seen the market collapse. And that's still continuing. And I thought it was worth having a look at what's going on with rent inflation. So we've talked about consumer prices and food prices. And this chart shows the year on year movement in rents in China. And once again, this scale starts at zero at the top and goes down to minus 0.35 at the bottom. And once again, here you can see that over the last 12 months, rents have fallen in every single month. And the most recent data shows that in August, rents were down by 0.1%, which doesn't sound like a lot, but this is cumulative. When you're talking about rents constantly falling, it starts building up. And if we look back over the last 3 years, you can see that rents have basically been struggling for that whole time. So if you're a landlord, if you're thinking about buying property in China and renting it out, this does not encourage you to do it because you're constantly going to have to cut your rent. So the amount that you're making, your yield on that property is going to go down. So that's not encouraging anybody to come into the market. And the other thing that's not encouraging people to come into the market is what's happening with house prices. This chart shows the year-on-year movement in new home prices, which is basically the main market in China. And same story here. We've got a scale that goes from 0 down to minus 7%. And in every single one of the last 12 months, new house prices have fallen. And the most recent data for July shows that year on year house prices are down by 2.8%. So if you're thinking about buying a property and you're constantly seeing the price going down, then you'd probably think, well, I'll just wait because I'll probably be able to buy it cheaper next month or the month after that or the month after that. And the last thing you want to do if you're buying a property is suddenly start feeling that you bought something that's depreciating in value. It's worth less today than it was when you bought it. So this isn't indicating that things are going to improve anytime soon. And in terms of looking at new home sales, what's going on with the movement in that? This chart shows the movement over the past 3 years. And you can see the most recent data shows that new home sales year on year are down by 18%. And over the last 3 years, the majority of these numbers are in the negative. So if we look back from August 25 to August 24, you can see that the figure was down at around minus 30%. So we're adding an 18% fall on top of the 30% fall from the previous year. And if we look back to August of 23, you can see that it was a similar story. The market was down by around 30%. So we've got 30% fall one year, another 30% fall the second year, and an 18% fall this year. And if we go back even further, it's the same story. So what this tells us is that the market is still completely shot in terms of what's going on with property in China. And that's a major problem because the one thing that could have saved China was the property market. Maybe if the property market was doing really well, then that could offset what's happening with exports and domestic demand. But unfortunately, this is a triple whammy. China is experiencing fall in domestic demand, fall in exports, or relative growth is not as fast as they were expecting, and the property market is still in the toilet. So what's the summary and conclusion today? Well, I wanted to post this update because we've been following what's been happening in China for a long time. And unfortunately, the story that I'm reporting from the August figures is a similar story to what we've been talking about for the last few months, that China is really struggling right now with all of its markets. The domestic market is really on its knees. We're seeing prices continuing to go down. China is struggling with deflation, and deflation is almost as bad as too much inflation. When you have too much inflation, prices get out of control, and so wage demands go up. People want to be paid more, they get paid more, they spend more, which forces prices up. And that's a difficult cycle to break without putting the brakes on the economy by increasing interest rates and causing everything to slow down. But China's going through the opposite of all of that. Rather than seeing prices rising, it's seeing prices going down. And whilst that might sound like the dream ticket, if you're a consumer, everybody wants to pay less, it's an absolute nightmare if you're a company because you can't plan ahead at all. You can't plan to give people pay rises. You can't plan to pay more for your rent and raw materials because you're seeing falling revenue from the sale of your products. But that's what's happening. That's the reality in China right now. And all that is doing is wiping out all of the profit the Chinese companies were making from the domestic market. So the home market is no longer anywhere near as attractive as it was. And that means that Chinese businesses are now looking overseas. They want to export more to try to offset what's happening in China. But unfortunately, this has come at the same time that Donald Trump has decided to increase his global tariffs, and China was basically the number one target when he came into office. There are now 30% tariffs in place on all Chinese exports, and it's possible that we could see that tariff actually increasing at some point over the next 6 or 12 months because a formal deal, a long-term deal, has still not been agreed. And as we saw from the data earlier, Chinese businesses are really suffering as a result of that. It's the number one market for Chinese exports. And we're seeing tens of billions of dollars wiped off the value of those exports, and it's still happening every single month. So Chinese businesses are really struggling at home and abroad. And the other thing that we've talked about in today's video is that the Chinese property market is still completely shot. It is on its knees. We are not seeing any signs of recovery, despite the fact that the Chinese authorities are doing everything within their powers to try to boost the market. They're trying to do things. They're offering lower cost mortgages and trying to encourage Chinese individuals to buy property. However, people have just simply lost confidence. When you see companies like Evergrande going into liquidation, hearing stories about people who've paid in full for apartments that have never been built, then nobody's going to really want to buy property, particularly as the prices keep falling every single month and rents are also going down. So even if you were thinking about buying and renting it, that doesn't look very attractive either. So we've got a triple whammy going on right now. The home market is really struggling for China. The export markets have been damaged by the global tariffs, and the property market is still completely bust. And until China sorts out those three problems, it's going to be very difficult to achieve the growth that it's looking for 2025. And I think there is now a major question mark as to whether or not it will be able to deliver that 5% GDP target that it's set for itself. And of course, that will be a problem for China, but it will also be a problem for the global economy because China is the second biggest economy in the world. So it does buy lots of things from all the other countries. So if we see a slowdown in China, that will affect lots of other countries that are exporting to China. And so we may see a slowdown happening all across the world as China continues to slow. So hopefully you've enjoyed today's video. You found it useful, informative, and thought-provoking. That's what I'm trying to do here, get you to start thinking about things in a slightly different way. Hopefully you enjoyed that. If you did, then please give me a thumbs up. And if you haven't done so already, please subscribe to the channel. Thank you for watching this video all the way through to the end. And thanks so much to everyone that supported me. If you bought me a coffee or sent me a YouTube super thanks, which I know some of you have in the last few days, so really appreciate that. Thank you so much. And if you're a long-term supporter, either through YouTube membership or Patreon or Buy Me a Coffee membership, thank you for that support. Really helps to keep me motivated. And here's something to put a smile on your face.